Federal Reserve Chairman Jay Powell today calling the economy strong and signaling no change to the central bank's rate hike plans of gradual hikes. Our Steve Leisman is in Jackson Hole, Wyoming for some reaction, and he is joined by a special guest, the Governor of the Bank of Canada. Steve, take it away.
Yes, Sarah, following your heart, we are going international at Jackson Hole right now. We are pleased to be joined by the Governor of the Bank of Canada, Stephen Poloz. Thanks for joining us.
Pleasure to be here.
So we have a rare opportunity here. This may be your last interview before you go into your blackout period and your meeting. So you had a recent inflation report that was a little hot, around 3%. Tell us how you're reacting to that and what that might mean for policy coming up.
Well, we don't want to offer a running commentary of the data, Steve, but fact is, back in our last report, we said that inflation would head up towards 3% during these few months. These are transitory factors. Our measures of core inflation, which extract all the noise from the data, are all right around 2%, so very close to target.
So you think that's where it's going to come back to? This 3% was more of an aberration?
That's exactly it. There's exchange rate effects in there, and there's energy price effects in particular. There's minimum wage effects, all of which will have a one-time effect on their year-over-year growth rate.
So I don't want to profess that our viewership is all that ignorant about Canada, but I think what they've been thinking about is that Canada represents some form of security threat. So I want to educate them about what's going on with the Governor Bank, with the Bank of Canada. You guys have been raising rates in almost lockstep with the Federal Reserve. You're a little bit behind, and now you're coming up. You've gone up from 1% to 1.5%. I think we have a chart even of the Canadian target rate there. That's the Canadian CPI that we just talked about. We also have the target rate there, which has moved up, and the outlook is for further rate hikes. Is that correct?
Well, it is. We're in a process of normalization, just as the Fed is. We started on this a little later than the Fed did, even though we came out of the crisis pretty similarly.
Right.
Then we had the collapse in oil prices, which caused a detour for Canada. But we're more or less back on track. The economy's back at full strength now, and so we're in that mode, watching the data carefully. The economy is more sensitive to interest rates today because of all that debt, so we're watching very carefully how it's responding to the past interest rate hikes.
Be our international observer, if you wouldn't mind. We have a U.S. central bank at 2%, Canada at 1.5%, ECB is negative, as is Japan.
Yes.
How is it possible that all of these rates are all over the place in what's supposed to be a globalized world, and where are they all headed?
Well, the conditions differ a lot from place to place, and even between Canada and the United States, such close neighbors. When the Fed was first starting its normalization move, we were cutting rates.
Right.
So we actually had rates moving in the opposite direction at the same time. And of course, with exchange rate volatility to go with that, but that's just part of the adjustment mechanism. So the underlying conditions weren't that highly correlated. We all started out this thing together in the crisis.
In the crisis.
But the escape velocity has varied quite a lot, depending on how quickly countries cleaned up the problems that were there. Or just the economy is adjusted.
Everybody eventually headed in the same direction? Can you see a situation where a year or two from now, all the global central banks are more on the same page?
Absolutely. Absent some new shock that distinguishes the behavior, such as the oil shock we had before, I think absent that, the law of Mother Nature is taking care of this. That's a healing process, and it's all in the same direction.
Let's talk about a very big issue right now between the United States and Canada, and that's one of tariffs. How do you process economically the tariffs that have been put in place between the United States and Canada?
So the actual tariffs, steel and aluminum, as well as some actions on the lumber side, those are actual actions, and we build them into our forecast. Things that are, threatened or just talked about, we don't. Okay, we don't respond to those. But if you take any, say, a generic tariff and you put it in place, what matters then is there a countermeasure? Right. And of course, there have been. So there are countermeasures, and that raises prices in Canada, by the same time as the tariff causing a disruption, which actually can have a slowdown effect, certainly on those sectors.
Do you see the tariffs as a major risk to the Canadian economy?
Yes, Canada is a highly trade-dependent economy, much more trade-dependent than the United States or any other major economies you're mentioning. And so for us, the entire structure of the economy is built on cross-border supply chains and us contributing to them. And disrupting those will mean very big adjustments for the Canadian economy. And it's causing today companies to delay investments in the uncertainty that they face.
And what's your outlook? Are you optimistic this can be worked out?
I'm a pretty optimistic person. I think that certainly around NAFTA, I think there's every reason to believe that we can work out the issues that are on the table. And the news in the last couple of weeks have been quite encouraging on the Mexican-U.S. front, and we'll rejoin in due course. And so yes, I think so.
Could you and the Federal Reserve Chairman and the Governor back to Mexico go in there right now? You're all three there. Could you solve this tariff problem in about 15 minutes?
About maybe less than that. but of course, politics is a much harder game than the game that we play. The central bankers, can say, well, we don't have anything to do with politics or any of those things. So it's much easier on a technical level, but it's much harder in a real negotiation.